This is Akashavani Mangalore. Yuva Vani. Good evening, listeners. Welcome to today's English VUVAVANI program. I'm your host Shazia. Today, the students of MCom department from Canara College, Mangalore will be presenting a delightful variety program on taxes and our economy.
Namaskara Mangaluru. You are tuned into our special presentation Taxes and Our Economy. We the students of MCom department of Canara College, Mangalore are here to make taxation simple, clear and interesting. Let's get started on this exciting learning journey by understanding the concepts of direct and indirect taxes by Bhavya R. Pai.
Hello to all our listeners. Today, let me briefly explain the difference between direct tax and indirect tax, two taxes that affect us every single day. Direct tax. A direct tax is paid directly to the government by the person who earns money. The best example is the income tax taken from our salary. This tax cannot be passed to anyone else. Indirect tax. An indirect tax is paid when we buy goods and services. It is already included in the price. GST, petrol tax, and tax on restaurant bills are examples. Direct tax is based on income, while indirect tax is based on spending. Direct tax cannot be shifted, but indirect tax is added to the price we pay. Impact on daily life. Direct tax affects our monthly salary and savings, while indirect tax affects the cost of things we buy every day like food, fuel, clothing, electronics, and more. Both taxes are important for the country. Understanding them helps us to know where our money goes. To know more about the importance of paying taxes, let's move on to Purvi JS.
Dear listeners, let's talk about something important in our daily life, taxes. Many people wonder, why should I pay tax? The answer is simple. Taxes are what keep our country running. The roads we use, the street lights at night, schools, hospitals, police and even fire services all exist because citizens pay taxes. So paying tax is not just giving money. It's an investment in society. The government uses this money to build better roads, improve transport, support farmers, provide education, strengthen healthcare and ensure safety and development across the country. Paying taxes is also a citizen's responsibility. When everyone pays their fair share, the economy becomes stronger, services improve, more jobs are created, and every citizen benefits. So the next time you pay tax or GST, remember you're helping to build the nation. Your contribution matters. Together we help India grow. Now let's know more about how taxes as an investment for the nation by Deepa.
Hello listeners. Today I want to take you on a small journey. Imagine India as a giant garden. A garden where every road is a pathway, every school is a blooming flower, every hospital is a shade-giving tree, and every citizen is a gardener. But what is the water that keeps this garden alive? Yes, that is tax. Many people think taxes are a burden or a loss. But today, let's look at it differently. When you pay tax, you are not losing money, you are investing in better roads that make your travel safer, schools where tomorrow's leaders are learning, hospitals that save lives, defense that protects our borders. So every rupee you contribute returns to you as a better facilities, better opportunities, a better future. So next time when you pay tax, think of it as a planting a seed that grows into a better future for your children, your community and your country. Now let's understand various heads of income by Sri Lakshmi R. Udupa.
Under the Income Tax Act 1961, income of an individual is classified into 5 heads of income for the purpose of tax calculation. This classification helps in systematic computation and assessment of income tax. income from salary. This includes income received by an employee from an employer, such as basic salary, allowances, bonuses, commissions, pension, and perquisites. It is taxable on a due or receipt basis, whichever is earlier. Income from house property. This head covers income earned from buildings or land attached to buildings owned by the SSE. It includes rental income from house property. Self-occupied property generally has nil income subject to certain deduction. Profits and gains or business or profession. This includes income earned from businesses or professional activities carried on by the SSE. Profits are calculated after deducting allowable expenses, income, profits and gains of business or profession. This includes income earned from business or professional activities carried on by the SSE. Profits are calculated after deducting allowable expenses incurred for earning the income. Income from capital gains. Capital gains arise from the sale or transfer of capital assets such as land, buildings, shares, or securities. They are classified into short-term and long-term capital gains, depending on the holding period. Income from other sources. This is a residual head which includes income not covered under other 5 heads such as interest income, dividends, winnings from lotteries, and gifts. Let's now understand income tax filing basics with Harshita H.
Namaste everyone. Every individual who earns income in India is required to file an income tax return, commonly known as ITR. Filing your return is important not just because it's a legal responsibility, but because helps you get loans, claim refund, and maintain a clean financial record. Do you know there are different types of ITR forms? ITR 1 is for salaried individuals. ITR 2 for those with salary plus capital gain or multiple properties. ITR 3 for business or professional income. And ITR 4 for small businesses under the estimated taxation scheme. Choosing the right from ensure accurate filing. Another important concept is double taxation. This happens when the same income is taxed in 2 countries. For example, if you work abroad and earn in India as well, India avoids this through double taxation avoidance agreement. So, you don't pay tax twice on the same income. Now, Arpita BD will explain how GST affects us and business.
Hi listeners, after knowing all about direct tax, let's move on to indirect tax. So, GST is a single tax on goods and services across India. It replaced older taxes like VAT, service tax, and excise, making the entire tax system simpler and more transparent. For consumers, GST makes pricing clearer because the tax is shown directly on the bill. Many daily use items become cheaper, though some products now fall under higher GST rates, making slightly costlier. Since everything is recorded online, GST also reduces tax evasion and encourages fairer pricing. For businesses, GST creates one common tax across all states, making it easier to buy, sell, and operate anywhere in India. Filing returns and managing invoices are fully digital, which saves time but can be challenging for small businesses that are not familiar with online systems. A major advantage is the input tax credit, which allows businesses to claim back the tax paid on raw materials. This reduces overall cost and helps keep price stable for customers. GST has also improved transportation by removing state border checkposts, making the movement of goods faster and reducing delays. Overall, GST brings uniformity, transparency, and efficiency to both consumers and businesses. While there are still challenges in compliance, GST continues to push India towards a more organized and modern tax system. Now, Pallavi HD will brief about GST tax reforms in India.
Namaste everyone. Let's understand how GST, the goods and service tax, has simplified India's tax system. Before GST, people and businesses had to deal with many different taxes like VAT, service tax, excise duty, entertainment tax, and more. Each state had its own rules, and this created confusion, double taxation, and extra paperwork.
GST replaced all these multiple taxes with one single unified taxes across the country in 2017. This made buying and selling goods and services much simpler. Whether you are in Karnataka, Delhi or Kerala, the tax structure is now the same. GST has also made bills more transparent. When we buy something, we can clearly see the GST amount on the invoice. This helps reduce hidden charges and corruption. For businesses, GST encourages digital payment and proper record keeping, making our economy stronger and more organized. Overall, GST is an important tax reform that aims to make India a unified market, reduce complications, and promote ease of doing business. To file the GST, we need to know about GST slabs and price changes, which will be summarized by Chinmay Devi Y.
Hello everyone, here is a quick update on the new GST slab for 2025. Now modified into 4 major categories: 0%, 5%, 18% and 40%. Under 0% GST slab, essential items like fresh vegetable, milk, egg, unbranded food grains, textbooks and certain life-saving medicines remains completely tax-free, ensuring no price change for necessities. The 5% slab now covers many daily use items like soap, shampoos, toothpaste, packed food, edible oil, paneer and cheese, making these products cheaper for consumer. The standard 18% slab applies to most electronic and home appliance items like TVs, refrigerator, washing machine and ACs. Meanwhile, the new 40% slab targets luxury and sin goods, including high-end cars, tobacco products and certain sugary beverages, meaning these will become more expensive. Overall, the new GST structure aims to reduce household expenses on essential while imposing high taxes on luxury consumption. Now let us hear about how input tax credit and current GST rate work by Chaya Rashmi HV.
Hello to all our listeners. First, let's understand what's input tax credit. Imagine you run a small shop, you buy goods from wholesaler and you pay GST on those goods. Later, when you sell those products to your customer, you collect GST from them. Now the good part with ITC is you are allowed to minus the tax you already paid from the GST you collect. That means you don't pay tax twice. Your business costs become lower, you can sell product at better price. So, ITC helps taxpayers to save money and reduce the final tax they needed to pay. Now, let's talk about GST rates. Different items in India have different GST slabs like 0%, 5%, 18% and 40%. Essential item have low GST, regular use item have medium GST, luxury item have high GST. But do you know what happens when GST rate changes? If the GST rate goes up, the prices of item increases. If the GST rate comes down, item become cheaper. But do you know what happens when GST rate changes? If the GST rates goes up, the prices of item increases. If the GST rate comes down, item become cheaper. This affects both customers and shopkeeper. When the GST rate on the goods you buy increases, you pay more GST. So your ITC increases. When the GST rate decreases, your ITC reduces because you pay less GST on your purchase. So overall, GST rate changes affects your daily expenses. The tax credit business receives the final price of goods in the market. And finally, ITC helps taxpayers reduce their tax. And GST rate changes affects how much we all pay and how much ITC business can claim. Nowadays, ITC has become useful in every sector, as well as in tax filing and auditing. Now, Swati GM will brief about the role of IT in tax filing and auditing.
Dear listeners, information technology has transformed tax filing by introducing easy-to-use digital platforms such as e-filing portals, GST system, mobile apps, and cloud-based solutions. These tools allow taxpayer to file return anytime, access pre-filed forms, make digital payments, and track refund quickly. Business also rely on accounting softwares and ERP system with built-in tax modules ensure accurate, real-time data and effortless compliances. Automation has further simplified taxation by reducing error and saving time. Smart systems also automatically updates tax rules, match invoices, calculate liabilities, and store record securely online. Mobile apps and cloud storage enable quick access and smooth collaboration between taxpayers, accountants, and authorities. In auditing, advanced technologies like data analytics and AI helps authorities analyze large volume of data, detect suspicious pattern, and reduce fraud. Features like faceless assessment, digital verification, and secure online documentation make the entire process more transparent, efficient, and trustworthy. Overall, information technology has made tax administration faster, smarter, and more reliable for everyone. After knowing all this, are you thinking about where our taxes go? Now, Nisarga will brief about it.
Hello everyone. Every time we pay tax, we are not just following a rule. We are actually helping our country run, grow, and stay strong. Think of our nation as a big machine and taxes as the fuel that keeps it moving. A part of this fuel builds our daily life: roads, bridges, railways, buses, and airports that help us travel and stay connected. Another part becomes care and support: schools, hospitals, vaccination drives, nutrition programs, and services for senior citizens and families in need. Taxes also keep us safe. Police, emergency services, courts, disaster teams, and of course, our army, navy, and air force all depend on tax money. Even simple things like clean water, sanitation, electricity, and digital services are maintained through taxes. And finally, taxes create opportunities, support for farmers, rural development, jobs, and programs that help businesses grow. So, remember, every rupee we pay is not money lost, it's money invested. Invested in better services, better safety, and a better nation. Now, even after all this, some people still feel unhappy about paying taxes. Let's find out why. By Sri Lakshmi R. Udupa.
Namaste Mangalore. Do you feel paying taxes more like a burden than duty? Let's understand why. Firstly, most taxpayers feel a lack of connection between the money they pay and the benefit they receive. When we pay tax, we don't see a direct return like we do when we buy food or clothes. So it feels like money is simply going away. Secondly, there is a trust gap. Many people believe that their taxes may not be used properly due to corruption, delays, or inefficiency. When trust is low, willingness to pay reduces naturally. Also, the problem of complex rules. For many Indians, the tax system feels confusing. Forms, deadlines, terms like TDS, slabs, exemptions. This confusion creates stress, and stress leads to dissatisfaction. In India, people complain about poor public services, bad roads, traffic, garbage issues, slow government offices. When citizens feel they are not getting quality in return, tax becomes more like a burden than duty. Many of us feel unhappy because taxes reduce our take-home income. The system can seem confusing and sometimes we don't see immediate benefits. There's also the worry that our hard-earned money might not be used properly. Psychologists call this loss aversion. We feel the pain of giving money more than the joy of what we get in return. But here's the truth. Every rupee we pay is building our country and improving our lives. Taxes we pay fund India's infrastructure, education, midday meals, defense, scholarship, schemes like Ayushman Bharat, PM Kisan, pensions, LPG subsidy for crores of people across India. Think of taxes as planting seeds for the future. Every road you drive on, every hospital you visit, every school your child attends is a return on your contribution. Paying taxes is not losing money, it's investing in a safer, healthier, and stronger India. So next time you pay tax, remember you are not just paying taxes, you are shaping India's future. Let's now understand the impact of taxes on economic growth by Divya Lakshmi.
Hello everyone. Taxes play a major role in economic growth because they provide the government with the money needed to build roads, schools, hospitals, digital services and public transport. When these services improve, businesses function more efficiently. People gain better opportunity and overall productivity increases. Taxes also help reduce income inequality, as high earners contribute more, allowing the government to support social welfare, education, healthcare, and rural development. This investment creates a strong, more balanced economy. At the same time, the impact of taxation depends on how it is designed. If taxes are too high or the rules are confusing, business may invest less and people may spend less, which slows down growth. Complicated tax laws can also encourage the tax evasion or push people into informal economy. A simple, fair and transparent tax system encourages compliance, builds people trust and ensures that tax money reaches the right sector. Now, let's know how tax deduction can help you save money and invest wisely by Arpita.
Yes, with the right planning, paying tax does not have to be stressful. Tax deduction simply means that some of your expenses and investments are subtracted from your income before tax is calculated. This helps you pay less tax and save more money. For example, when you invest in options like Provident Fund, life insurance, mutual funds, or pension schemes, you not only build a secure future but also get tax benefits. These investments encourage long-term savings and financial discipline. Health insurance is another smart choice. Paying a health insurance premium can give you tax relief and also protect you from unexpected medical expenses. This way, you save tax while taking care of your health and family. Tax deductions also motivate people to invest wisely instead of spending all their income. They help in better money management, future planning, and achieve goals like education, home ownership, or retirement. So remember, tax planning is not about avoiding tax. It is about planning your income smartly, using legal deductions, and making informed investments. Start early, choose wisely, and let tax deduction work in your favor, saving money today and securing your tomorrow.
As we come to the end of this beautiful journey of taxes and our economy, we hope this program helped you understand how taxes shape our country and our daily lives. This was proudly presented by the students of Final MCom, Canara College, Mangalore. I would like to thank you, the MCom department of our college, for giving this opportunity. Thank you for joining us. Until next time, stay informed, stay responsible.
Dear friends, you have just heard a wonderful group presentation on taxes and our economy by the students of MCom department from Canara College, Mangalore. This is English VUVAVANI signing off for today. See you next time. Till then, take care and bye-bye.